If you're wondering how things are in New York, this is what the Empire State Building looks right now. The markets were a bit easier to navigate last week. They'll be able to navigate into New York certainly in the next couple of days, as these buildings are barely visible. So let's look at the markets. For the week, you can see only a couple markets were higher. Gold had blasted off to the upside at the end of the week, and the NASDAQ 100 managed to eke out a small gain. Everything else was lower. So if you look at the New York Composite, it did a bit better than either the S&P, or the Russell or the Dow, and utilities got hit pretty hard. If you look at it on a year-to-date basis, you get a little different perspective, and gold's still right in the front. Then we have small caps, the transports, and the New York Composite, which is over a percent better than the industrials and almost 2% better than the NASDAQ 100 and the SPX. This, I think, will be significant. For the week on the NYSE, advances and declines were pretty much equal, a 4-issue difference. The NASDAQ was a little bit better, 25.55 versus 24.65. During the week, it was, a bit of a chop fest. The last, on Friday, for example, these numbers were like 1822 advancing versus 790 declines about 10:30 in the morning on Friday, and you can see where they closed. So they reversed to negative, but in both cases, and you can see what happened here, the new highs held above the new lows, but not by the margin we've seen recently. In terms of the AD lines, all have made a new high on a daily basis. The S&P 500 AD line, stocks only, you can see slightly higher highs. Support we're watching is obviously at the moving average, and the stocks only and the NYSE all AD, all in positive trends. On a weekly basis, the S&P 500 AD line as well as the NYSE also made new highs already this year, and you can see the bull and bear took a bit of a swing last week. It dropped fairly sharply after a very strong move higher. I guess the best thing you do is it's still in an uptrend. A bullish development would be a push back above, and then you have a pattern of higher highs and higher lows. Conversely, if we were to drop below the December low, that would be a less positive swing in the sentiment rather. The weekly chart of the Qs still is positive. You can see it's holding the 20-period EMA at 605.45, closed at 622.72. This low in November is likely the most important support. NASDAQ 80 line, it made a new high in December, holding above support and its moving average. The RS on a weekly basis has edged back above its moving average. This is getting quite interesting here. The daily version of this, we noted last week that the AD line broke this support here in pink on a daily basis, but has rebounded back above its moving average. So typically, this sort of break, then, if the market moves back above these highs, that would be a bullish sign for the Qs, and it suggests they're ready to rebound. Of course, growth has been getting hit pretty hard. Or conversely, if we drop back below this low, that would favor a deeper correction. In terms of public sentiment, it seems to be a bit mixed. Of course, this is the big week for earnings in tech. So you can see the daily chart here. We've been bumping into this downtrend here. The support at 614 and then at 607. I'd be looking for the 597.50 and 599.51 area for a stop if I were going to buy on a decline. The growth value chart shows that value is still leading here slightly, but its rate of descent has slowed. Not really evident in the MACD. They're both negative and still pointing. If this up support line breaks, wouldn't be the end of the world. More important will be this cluster of lows down here. Small caps like the iShares Core S&P Small Cap IJR, had pushed to a new rally high and then closed down slightly. So that's possibly early profit taking. Of course, this has been a tough trade, since the end of 2024, as the decline from that high lasted a lot longer and went deeper than most of us were expecting. Technically, volume did pick up last week, so that's not a great sign, but at least it wasn't explosive like it was off the lows here. AD line, is still positive. It broke this downtrend, so that was pretty strong resistance. Needs to hold above that on any pullback, and of course a break of the support would be a concern. The RS does suggest that IJR is ready to lead the S&P. What we'd like to see here, if we do get a pullback, another strong move in the RS above this downtrend, and that would be typically what we would see in a strongly trending market. The VIX and the VXN are kind of in an interesting situation. Rallied sharply up to 20 and then closed the week just below its moving average by a fraction. So, we have a pattern of higher lows here, so that's slightly positive. Remember, as the VIX goes up, that's usually a sign of that's negative for the stock market. So we're watching this early in the week. If it gets back above 18 or so, and certainly 20, that would be one of the primary negative factors for the stock market. The high lows are still acting well. You can see for the NASDAQ composite, we made a new high well above 500 last week on Thursday. That's a good sign. We're still watching this resistance level around 500, in the new lows. So, we haven't even came close to that since November. And if we look at the NYSE composite, it also moved to a new high here last week. So it's supporting a positive trend in the market, as are the weekly AD lines. Of course, earnings next week likely control the market. Meta had a nice rebound last week. If you look at this daily chart, the daily studies are weekly positive. For the week, it was up 6%, which is pretty good, just back above the pivot. So typically, a close above that yearly pivot is a sign of a trend change. I'd like to see two weeks above that, but that certainly is encouraging. If that's the case, you can see that the mission target would be 804, which is the yearly R1. Not too many other ones look as good. Intel, of course, got crushed last week, down 17% just on Friday. Amazon is also trying to rebound, vis-a-vis its yearly pivot. It is holding above it. We had a high of 248, dropped down below the 20 period, and then closed above it. That shows you a positive sign. And both the relative performance here and the OBV are positive. Week for stock positions. Those of you not familiar, our typical approach is we recommend a position and it starts getting a double-digit profit, like above 10%. We usually recommend taking half that profit off, ideally in the 15% range, which was the case for Curtiss-Wright. And CVCO too had a great move from about 600 up to 700 in just a few weeks' time. And Darling also is acting really well. And Dan had a stellar move last Wednesday. And of course, Newmont, we sold out half of our Newmont position a bit early, but it's still chugging along here. it's got a great looking chart, and despite being very extended, this was the breakout here in the downtrend. We show no signs yet of a top. I'm starting to put up positions at the end of the week on the Viper report, and here's what the current positions are as of last Friday's close. So let's look at some watch lists and what looks to be moving. New weekly sell signals in ETFs in IHI, IWF, that's the Russell Growth, VFH, that's the Vanguard financials. Those are both getting down there towards the yearly pivots, particularly XLF. So we're watching that as we think that's probably going to be a buying opportunity. If you scroll down here to the report, positive market gauge 82%, growth at 70, value at 90. So 90 is still leading. You can see XLC gave a daily buy on Friday. XOP is acting great, as are the other energy ETFs, VDE, and somewhere we have XLE, right? XLE here. So that's all looking pretty good. Volume on XLF was heavy, as indicated by the red here. Short, there's some positive signals on the S&P short ETFs, SDS, SPXS, and also SQQ. That's for the Qs, and QID. That's just a daily signal. The weekly, still says you should not be in the short ETFs, and down below favors the long ETFs, including TQQ, etc. Quickly give you a look at the weekly of the futures. It is still positive, though the daily flipped to negative at the end of last week. So, one of the problems or concerns I guess I have is that this has been a pretty long rally without really, we had this little pullback here without a lot of a correction. That and the FMS cash levels, as I noted from the B of A survey, in this month's report dropped to 3.2%, which is typically, warns that you should be on the lookout, because if we see, a pullback, it could be quite sharp. If you look at the sector report, you can see that Meta and CSX both reported last week, or CSX did anyway, and 3 DTS signals. The weekly is still negative. Of course, the all-important gauges here, when you zoom in here, energy had another good week. You can see that, sort of uncertain the last couple of weeks of whether you're going to break out above this high. We did. So now it'll be a challenge. The structure in the crude oil market is not really, has kept me from buying. We'll see whether that was a misdirection play or not, but certainly given the volatility in both crude oil and in the global situation, I would not chase prices. So if we see a decent pullback, we'll take a look. Materials also continues to look really strong. Not much red on the table here. If you drill down here, you can see that Sherwin-Williams 4-hour and 1-hour APD rather daily, and VMC also are negative daily. Industrials, a screaming chart here also. There's some lagging ones. So look at Caterpillar, Deere, and GE. We took some good profits out of GE, but then it just cracked on its earnings. So it's been one of our friends. You can see, that UPS is still all green, and CSX, as I noticed, gave a 3-day. Consumer discretionary has me shaking its head. Finally, consumer sentiment rebounded last week. I mean, it's been so much weaker than prices. I'll probably write something up for the website this week on that, because it's usually a pretty good leading indicator, but it's been just getting crushed, even while stocks have gone up in the last couple of years. So discretionary MACD is positive. Lowe's is a 1 hour, and back early again, computer or auto parts, but still, not a lot of good volume there. 66, so that's a positive reading. You can see we're trying to turn back above the slow-moving average. So, of course, if we can move above these two peaks, that would be a pretty good sign. Staples have been roaring to the upside, as noted by Jerry A's comment on rotation sectors a couple of weeks ago. It still looks quite strong. Typically, of course, it's more of a defensive group that will start to underperform or start to outperform as we get closer to a correction. So that'll bear some watching. Healthcare still positive at 75. Looks like its pause is over, and we go into financials. Look quite ugly. You can see here 27.3%. RS is broken down. Technology still looks weak. NVDA had a daily, buy signal on Friday. Communication services, starting to see a few positive things in the XLC and, some of its components. But, we have no position there. We finally closed it out. We just thought it was looking too vulnerable. You can see the RS here. It may have gotten back to support, which was a good signal in XLP a couple weeks ago, but still below the fast is still below the slow. Utilities looks a little more friendly, as does real estate. Of course, does both have a yield play there, and that is probably what we're seeing. If you're not a subscriber and don't get the ETF report on the Viper report, we just posted this weekend's ETF report, so you can see the whole thing is here, and of course you can, enlarge it or download it if you're interested. And of course, if you'd like to join one of our services, ETF report of the hot stocks, you can sign up on the website and also get some more information. Hope you enjoyed the video and hope you survived the storm. We'll be back next week.